Good afternoon, everyone, and welcome to our special Voracity training session. We're glad you can join us. My name is Raul Aurora. I'm the Coaching and Education Coordinator here at Trading Winds. It's always my pleasure to host these sessions with our head trader, Vince Vora, whom we will introduce shortly. I'm going to get some of the pleasantries out of the way. We're just at half past the hour. We're going to give a couple of minutes to some of the folks that had sent us messages saying they're running a little bit late, so we'll give them the courtesy of just talking about the markets a little bit before we get into today's session. This is an interactive session. It will be recorded. You can ask any questions you'd like. We'll do our best to get to as many as we can. It looks like it will be very busy. I'm just seeing the number of attendees coming in, and that number just keeps going up and up. And I do see a lot of questions already as well. First order of business is always to make sure you can hear us and see us clearly. That always helps get more out of the session. If you can, please let us know. I see a couple of familiar names. I see Randy, Ron from Ottawa. Ron, nice to see you. Haven't seen the name in a while. Hope all is well. Sam in East Hampton, of course, Randy in Waterloo. Greetings from the wonderful world of farmers outstanding in their fields. No doubt, Randy, no doubt. George in Glendale, Mehdi in Notting Hill Gate. Nice to see all of you. Let me bring in our head trader, Vince Vora. We'll take a quick look at the markets and see what the action was today before we get into the training for the day. Vince, good afternoon to you.
Good afternoon. How are you?
I'm well. How are you?
Excellent. Thanks.
We are firmly in the summer doldrums. It's the 14th of August, and it seems like the market's not doing a whole lot. We had some news yesterday on gold and oil and things like that, but we've had earnings are behind us. Lots of excitement in the tech sector.
Mm-hmm.
Where's the next opportunity that you see?
You know, it's funny. I was just doing some research for the videos I'm going to put out later tonight, and I was taking a close look at the chart of the New York Stock Exchange Bitcoin Index. I know how
I never thought those words would come out of your mouth.
I know,
all in that order.
No, it's really at an inflection point, and it's at the point where it's either going to completely collapse from here. And I mean, you can call what's happened so far a collapse. It's lost 2/3 of its value over the past few months, but it's either going to collapse completely, or this could be the buying opportunity of the century. I'll cover that in the video later tonight. But and you know, of course, Voracity is something you can use to give you a heads up when and if those triggers you know, actually form on the chart. But we are, like you say, heading into the slow part of the year. The last 2 weeks of August, we have seen some lighter volume. Again today, we did see light volume, although U.S. equities did bounce after the Turkish lira bounced off its record low. The Dow was up 112 points, the S&P was up 18, the Nasdaq up 51, and the Russell managed to gain a very, very healthy 17 points. So not a bad day overall for equities.
When you are looking at charts, you presumably on days get more than one chart that looks good. What makes for a better chart?
Oh, there are a number of factors, and I mean, we'll go through some of those today, time permitting. But that's usually why we follow these sessions up with another class. There are a number of items that you can look for on your chart to compare one to the other. Basically, what you want to make sure is that you have both trend and momentum on your side, and there's different degrees of it, and there are different tools you can use to help you judge the degree of momentum, or you know, how solid that trend is. But that's really what, you know, once you're trading with both of those on your side, you should do quite well.
For those of you that are joining us for the first time, we are with Vince Vora, head trader at tradingwinds.com. He's been trading professionally for the last 30 years. His last 10 years of his career, the focus has been on training retail investors and money managers and helping them better their craft. Vince, how did you come to the point where you became an instructor instead of someone who actively participates in the markets on a daily basis?
Well, many years ago, you know, I decided to leave the corporate world, and you know, at first I really questioned the decision, but later on it ended up being one of the best things I ever did. But I continue to work on the systems that I trade with today. And so a few years later, we decided to actually take those to the public. And I'm happy we did. When we first started doing this, I always knew how well something like Voracity worked. I mean, I created it, and I continue to use it today, and it gets better and better. But it's nice to hear now how many people out there are using it and doing well with it. So I love the feedback, and I'd love to hear from all of you who have tried this in the past or will try this. I look forward to it.
All right. And for those of you that aren't joining us for the first time, we like to have a little bit of fun along the way as well. Vince, which of these headlines would you click on? Guinness to open its first U.S. brewery in 60 years, or Rolls-Royce debuts its first ever SUV for $325,000. Take a look inside.
Yes, I saw that today, and I did look inside. I couldn't resist.
All right. So how many are you getting? This is our Voracity training. Today is the 14th of August 2018. We're glad you can join us. Voracity has been a system that's been in play for a good part of 20 years. It wasn't released until 2016 when there was overwhelming demand to kind of share what the system was and how it works. I'll let Vince talk to you a little bit more about that and specifically how it can work for your trading. Vince, let's talk about Voracity.
Excellent. Okay, well, welcome everybody. Thanks for being with us. Really appreciate it. This is Voracity, and this is really my baby. Something, as Raul said, I've worked on for the better part of 20 years. The system came together, or the guts of it really came together fairly quickly, 2 or 3 weeks. But then I spent the rest of the better part of 20 years, as I said, actually overcoming some obstacles in there and trying to perfect it. What I was really trying to do was really limit the amount of risk you take on every trade without capping the upside. I'm sure you've heard that many times, something that is very difficult to do in the markets, especially when you're as conservative a trader as I am. I absolutely hate risk, and that's why I was really obsessed over it. I think it is now at the point where it is about as good as it's going to get. While I continue to look for improvements, I think it is very consistent, or at least it has been for me. So let me tell you all about it. This is a great system that is strictly based on technical analysis. There are no fundamentals whatsoever. Any of you who have followed me for a while know why I don't follow fundamental analysis. I often will trade a chart where all I know about the company is the symbol and nothing else, and that's the honest truth. But let me explain to you exactly why and how this works. First of all, please do remember that trading can be risky, so please don't trade with real money until you are completely comfortable with the system you are using. And as Raul said, I am Vince Vora. I have been trading for well over 30 years now, and I am the developer of Voracity. That's me in the right-hand corner if you've never met me before. Now, in today's presentation, what I'm going to start with is something many of you have probably heard me talk about before, and that is my money management rules. These have not changed for many years. I continue to trade with these, but I never think it's fair to show you any sort of strategy without sharing my money management rules with you. This is a key part of the whole system, so we'll share those with you. Then I'll talk about the components that make up Voracity. Again, this was my search for the Holy Grail, and it has worked out to be a very effective system. Then I will talk about how it works and why it works, but more importantly, how it can work for you. And along the way, please type in any questions you have. Raul will be keeping an eye on the chat and monitoring your questions. He will interrupt me if he needs to, and if not, we will answer as many as we can near the end of the session. Okay, so let's get started with
sorry to interrupt. I also just wanted to add For the
Hmm.
questions, we're doing something a little different today. We'll certainly try to get to as many as we can throughout the session. Because it's
Hmm.
a busy session, if you want to put your phone number in with the question, we will definitely have someone give you a call back if we don't get your question through the session today.
Absolutely. That's great. Okay. Excellent. Now let's get started with our money management rules. Actually, I'll get a quick question out of the way very quickly. And this comes from David. He says that he's seen me use the 20 period moving average before. Is it a simple, an EMA or other? It is a simple period moving average. And I'll actually add it to my chart today. Okay. We don't normally have it on this Voracity layout. I'm going to add it for you just so I can explain how I use that. But let's get started with our money management rules. First of all, when you sit down to trade, your mindset is extremely, extremely important. Some of you may laugh at this bullet point here, but it's not a laughing matter at all. In fact, over the years and along the way, I've coached hundreds of people, and what I have found, and also that I know from experience, is that if you're not feeling quite well that day, or you're distracted, or for whatever reason are not in a positive mindset, that is when you make the most mistakes trading. And as you know, when you're trading, any mistake will cost you money. So you definitely want to make sure that you turn all distractions off, that you're focused, that you're positive, and that you're feeling well that day. Otherwise, turn the laptop off and go do something else and come back to trade another day. Now, trading is actually really all about how you manage an order once you're in it. It's not about the entries and the exit. I mean, something like Voracity will actually highlight the entries and the exits for you. It'll tell you exactly when to get in and when to get out. But it's how you manage that order that is extremely important. And so to do that, what I always suggest is that you trade with an amount that feels completely insignificant to you. That will vary from person to person, and the dollar amount does not matter at all. For some of you, it could be, a couple $100. For others, it'll be several thousand. The amount doesn't matter. What matters is that it feels completely insignificant to you. Think for a second, if you put $5 into a trade, would you really be all that worried about losing that amount or not? Most of you, I'm sure, would say absolutely not. And without having that worry, that concern, you're able to think clearly, follow your rules, and manage that trade appropriately. If I asked you to put 5,000 into a trade, many of you would absolutely worry about that. And when you are worried, you won't be able to think clearly. You won't be able to manage that order appropriately. So please, number two here, point number two is extremely important. Also, as I said earlier, I'm extremely conservative, so I always try to find ways to limit risk. And another way of doing that is to never put any more than 5% of my account balance in any one trade. Now, the goal for you with this rule should be to consistently reduce that percentage. Okay. As your account grows, you want to take that from 5 to 4.5 to 4, etc., all the way down to 1% if possible. What you'll end up with is you'll still have a sizable trade on, but when even if the trade completely blows up on you, you lose 1%. When you get to that stage, you're going to be doing very well. You won't worry about your trades at all. And that 1% risk that you're taking can actually turn into a very, very healthy profit. And I'll show you when we get to the chart portion of this presentation. Now, there are things that we cannot control when it comes to the markets. Okay, there are always things that are completely out of our control. I hate to bring this up every time, but the best example I can give you is something like 9/11. When 9/11 happened, there's no way any of us could have predicted that event or, did anything after the fact. What we could have done was limit our risk or our exposure ahead of time. And one of the ways we do that is to always keep 50% of our account balance in reserve. In other words, in cash. That may sound crazy to some of you, but if such an event like that were to happen, it will really make a big difference. If you can recall when that happened, the markets never did open that day. In fact, they stayed closed for another week. And then when they did reopen a week later, most stocks were 50% lower than where they were the week before. And there was no way to get out. There was nothing you could do but lose half your money. And so by doing this, you'll live to trade another day. Even if something like that does happen, the amount you'll be down won't be that dramatic, and you'll have money to put back into the markets and make back that loss. Okay. Last but certainly not least, you want to spread your trades out. What you're going to find is on any given day when the market moves strongly in one direction or another, you will find a lot of trade setups in that particular direction. The last thing you want to do is jump on board and put on 6, 7, 8, 9 trades in that one direction, because we've seen many times that a strong day is followed by the market reversing completely. And if that were to happen, you'll find yourself in a huge hole right off the bat. And that's exactly what you want to avoid. So your job as a trader is to look through all those trade setups and select the 1, maximum 2 highest probability trade setups for whatever time frame you're trading. Okay. And we'll talk a bit more about that as we go through example by example on the charts. Now, a couple of other golden rules we follow. Number 1, we always like to say that you will never go broke taking profits. I always leave this on the slide for those of you who may just be starting out. One of the most challenging things for you as a trader, at least at the beginning, will be to remain in a trade for the life of that order. In other words, most of you will find yourself getting scared out of a trade partway through, only to kick yourself later as you see the potential profits being left on the table. So what I want you to do is not feel bad about that. What I want you to do is actually take profits when you have them at the beginning. This will do 2 things for you. Number 1, it'll help you build your account. Okay. And secondly, it'll help you gain confidence, not just in the system that you're using, but in yourself as a trader, which will pay off big time later on. As we go through this and I show you the examples, what you're going to realize is that the amount of risk you're taking is very small on each trade. So you can afford to take small profits and still do well. So please, at the beginning, bank those profits. And secondly, I need you to understand that this is not about you. If you're in this to become the world's greatest stock picker, you're setting yourself up for losses. Okay, you don't control the market. You don't today. You never will. Okay, so stop believing that you do. What you need to do is manage the orders. That is it. So what's important at the end of the day is how much money you make when you're right compared to how much money you lose when you're wrong. In other words, it's all about execution. Okay, I will give you a plan. I'm giving you my money management rules. I'll give you a system that will highlight when to buy, when to sell, etc. Your job is to follow the rules to a T. And if you do that, what you should find is that A, you'll have more winners than losers, and B, your winners should be much greater than your losers. And with that kind of math in the long run, you should do very well, okay? Now, let's talk about Voracity and the components of it. Voracity over the years has become a system that involves several indicators and oscillators that when they all line up, they usually give very accurate signals. Now, it is not 100%. I'll say that right up front. I've never seen anything that is, but it is highly accurate. And I will show you ways to make it even more accurate as we go along. Okay, this has been back tested and forward tested. What I mean by forward is with real money over many, many years and through all different types of environments. Okay, strong markets, bear markets, flat markets, flash crashes, you name it. It's been put through the ringer, and it's performed well consistently. So what is it meant to do? What will it do? Well, it's designed to catch the big moves. Unlike, our favorite trade setup or our winning momentum strategy, which are great. I use them all the time. Voracity was designed strictly to catch the big moves. Okay. Not only that, it was designed that way while keeping losses small and allowing the gains to pile up. In other words, this is the portion that took so long. It took so many years for me to figure out how to cap the losses and keep them to a minimum without capping the upside, okay, potential. So now we have the opportunity to catch those big moves without taking big risk, all right? And so what it really does is it maximizes the safety component in each trade. And I'll show you as we go through. What can it do for you? Well, not only will it help you identify some great short-term and some longer-term, some swing trading opportunities, but if any of you manage a retirement account or are more into investing than trading, sticking with positions for the longer run, you're going to absolutely love Voracity. Okay. First of all, any system based solely on technical analysis will always be more accurate on the higher time frames. That doesn't mean that this isn't accurate on the lower time frames. You can trade as low as a 1 minute chart and you can do very well. But when you trade on a chart, like a weekly or a monthly, it will always be a cleaner chart. It will trend more strongly, and it will remain in a defined trend for longer. So those bigger trades that we're looking for turn into massive trade opportunities, and I'll show you several today. The other thing that Voracity does is it can predict major market moves by using it on the index charts, like the S&P 500, like the Dow 30, like the Nasdaq 100, like the Russell 2000. Okay, so let me bring up the charts and let's start showing you what Voracity can do. Now, this is the Tactical Trader platform. It is a robust charting platform. I'll quickly just tell you that you can do everything you can on most. It has drawing tools. It has a number of indicators, all other tools like Fibonacci tools, Gann tools, the pitchforks, you name it, all the usual that you're used to trading with. You can customize your charts any way you want, any colors, any background setting, you name it. A slew of indicators, just about anything you want. You can compare one chart to another, all of those. You can create your own watch list. You can easily sort by different columns. You can customize them in many different ways. And there are scanners here, many other tools that I'll get to later on. For now, I want to focus on trading opportunities. And to start, I want to give you a tip before we actually get into plotting the Voracity strategy, and that is to trade a clean chart. Remember, the trend is your friend. Whether you trade it or not, that is the million-dollar question. And most people, the biggest mistake most traders do is to not trade the trend, but to trade all sorts of choppy markets. So have a look at this chart. This is ABMD. And you can see how predictable it is. It's been since last October, just slowly but surely trending higher. Now, recently it's turned around, but it's still very orderly. It's very easy to spot the fact that we've had a lower high and a lower low now and shifted, and now we're starting to pull back. But it is very easy to read and very easy to trade. Now, another very, very popular stock that I'm sure many of you have tried to trade in the past is Tesla. But have a look at this chart compared to ABMD. Which one is easier to decide whether we are in a trend, an uptrend or a downtrend, etc.? What the next direction is? Which one is easier? It's clear. ABMD by a mile. Tesla has been extremely choppy, very unpredictable. And when you have a chart like that or try to trade a chart like that, what will happen most often is that you're going to get whipped around and you're going to get chopped. You're going to get stopped out very, very quickly. That's because it's very volatile. Now, if you're an extremely aggressive trader, you may enjoy trading a chart like this. It does not mean that the odds are in your favor. You can be aggressive and still minimize the amount of risk you take. That's where Voracity comes in. So let's talk about Voracity. Let's go back to ABMD for a second. Actually, let's use the Qs. Let's use an index chart so that I can give you an example of how you can use this to forecast the direction of the overall markets. Up here in the top right-hand corner, there's a drop-down menu. Now, right now, I'm using the default chart layout, which is just a clean chart with candlesticks. And by the way, you can change this to open, high, low, close bars, Heikin-Ashi bars, whatever you prefer to trade. Here's the Voracity tab. Let's bring that in. And that will plot these little red and green circles. Okay. Now, if I'll zoom in a little here and show you that if I hover my mouse over them, they actually bring up labels. So they tell you exactly what type of labels they are and what you should do. Okay. So here, this was an exit flag for the previous trade, which is a downward arrow. Here is a sideways arrow, which means this is a setup. Not time to go long yet. It's just a heads up that, hey, we may be entering this trade long. Okay, so the green circles relate to a long trade. The red circles are a short trade. If in fact it does trigger and decide to get you in long, it will give you this type of arrow pointing upwards, and the little text here box will say long enter. Okay. Going back here, here was a short setup that was never triggered. There are rules that suggest whether it should trigger or not, and this one did not have all the components like we thought. It never did trigger. Okay, so those are the arrows. Now for now, I don't want you to focus on each individual little signal here. I think as a trader, your first instinct is to look at them and try to quickly decide while I'm talking how many were winners and how many were losers. I'd rather you listen to me right now, and then you can take this for a test drive yourself and see exactly how it does. What I will tell you is that the intent here is not to take every setup. So although you will see a lot of setups and triggers on these charts as we go through them, the intent is not to take them all. The intent is to look for very specific types of setups. And when you can identify those, your accuracy rate is much improved. Okay. And I'll get to more of that in a second. But have a look here at a chart of the NASDAQ. Going back here to 2009, which was really the end of that crash in 2008. I mean, the bottom was put in back here in March of 09. Voracity identified this as the next bull market in October of 09. That lasted until March of 2016, and then it told us to re-enter in April of 2016. Okay, so even though it may have gotten us out, we would have missed a very small amount of the run before it identified it. Trust me, you want to get out when it tells you to get out and get in when it tells you to get in. Again, there's a lot of indicators and oscillators behind this that when lined up are very accurate. And now, since April of 2016, we've been in that bull run that has not come to an end just yet. These are the types of massive trades I'm talking about. Now, this is a monthly time frame. I'll show you all sorts of different time frames, but this is exactly what you want to look for. All of these little ins and outs here, even if you took them, right, you should still do well considering how big the winners are compared to the losers. What I want you to identify in here is the fact that when it tells you to get in, and it doesn't work out, when it starts going against you, it gets you out immediately, okay? So your losses will be kept small, even though you won't be taking all of these, but when you do, if it goes against you, your losses will be small. But when you do catch a runner like this, it'll keep you in there, okay, for the bulk of that run. We can look at the Dow Jones, for example, exactly the same way. Now, when you see that it calls a bull market here on the monthly, doesn't mean you have to trade on the monthly. You can go down back to the daily and just know that the overall trend is higher and that you should really be focusing the majority of your positions to the long side, okay? Now, I said earlier I was going to put on the 20 period simple moving average. And let me throw that on here and I'll explain why I use that. Let me just adjust this from a 9 to a 20 here. And let me thicken it up a little. That's maybe a little too thick. Yeah, let's go with that. All right. So the 20 period moving average helps us identify momentum on a chart. So what you want to see is that you have a slope on that 20 period moving average, simple moving average that is, in the direction of your trade. And what I want you to notice as I go through this presentation and show you example after example, have a look at the ones that tell you to go long when the 20 is sloping higher, and the ones that are telling you to go short when it's sloping lower, as opposed to the ones that are telling you to go long or short when that moving average is flat, okay? You'll notice a big difference, all right? Now, let's have a look at some stocks. And by all means, you can throw out a symbol if you want. If we have time, we can bring it up. I'm just gonna go through some random stocks here. First of all, when you're on this platform, in order to keep the strategy on, you have to go to Voracity here, leave it on, and here on the watch list, click this to Voracity. That way, if you're just clicking on these symbols, it'll bring up your chart with the Voracity system already on there. And here on your watch list is the time frame. So if you'd rather see a different time frame consistently on every chart whenever you click these, you want to select it from here. We're going to stick to daily for now. Here's a chart of Microsoft. Now, earlier I said, keep in mind, here's that flat moving average, right? And there's a cluster of signals in here, most of which we would never trade. There are reasons behind here. We have a full pro training class that we hold that I'll talk about a little later, where we will teach you exactly how and why you want to avoid these. And then there are trades like these that the system will catch the majority of the time, and so will you, and you'll understand exactly why. The main reason why you would want to trade this signal compared to this one back here is because the bar here, the green bar associated with the trigger, actually clears the previous highs of all of these symbols, okay? Clearing a previous high, especially when it's an all-time high, is an extremely powerful edge for you to trade with, okay? There's no resistance up ahead. There's nothing preventing this stock from running, okay? So that's why we would jump on this particular setup, and you can see it worked very well. Here, we went from about a high of 86 on this bar back in here to when it was about 96. This is about a $10 move on Microsoft. Not bad. Back in here, recently there was another nice setup that we continue to be long. Back from the 102-ish area, we're now at 109.5 and still going. Back in here is a perfect example of one of those when we were trending higher and with momentum. That was another nice winner. That's what you want to focus on. You don't want to take them all. You want to focus on the ones that have momentum on your side or that have a specific reason, like breaking a previous high here for a runner to the long side. It works the same to the short side, and I'll show you a few of those as well. And again, it's not just the daily time frame, it's any time frame. Have a look at the weekly chart here. Actually, let me just change it on this side. Weekly. There it is. Look at those runners on Microsoft. Going back here to July of 2016 kept us all the way in. That was from about the 52-ish range, $52 range to over 95. I mean, that's almost 100% return. It's almost double the stock price. Got us out briefly, got us right back in when it realized the trend was not over yet, and we've been in it ever since. These are the types of runs you want. Have a look at the monthly chart. Okay, here. Oh, for some reason it's not giving me the symbols. Let's try to refresh here quickly. And the winners on the monthly and the weekly are explosive. Here's those winners. Let's try this once again. But whether you're on a 5-minute chart, here it is. There's the monthly right here. So since April of 2013, it's been telling us that Microsoft is in a bull market, bull run. How easy is it to manage that, right? Along the way, you could be collecting dividends. You could be selling calls against it to bring in more premium. How easy would it be to manage a portfolio with that? And if you really look at this, if I take out the signals, the Voracity signals, have a look at this. This whole area here from 2008 to 2013, it was nothing but sideways, right? Nothing but sideways. Once we cleared that high, that 2007 high here, that's when we took off. It got us in shortly after that, and we've been long ever since. That's exactly the kind of edge you want. Let's have a look at a number of others. And they don't have to, they don't need to be stocks. It could be futures, Forex, you name it. Let's look at a Forex pair. USD CAD, I follow quite a bit. Let's try that again. Here we go. There's the CAD here. This is a 1-minute chart on the USD CAD. 1-minute chart. Have a look at those signals. There they are. If there's a big move, more often than not, it'll catch it. There's that one. There's this one. What do you notice here? There was a really nice slope lower, right, on that 20. Very, very easy to understand. Let's go look at the higher time frames. Let's look at the daily chart, right? There was a nice runner in here. The rest, not that great. There is, though, however, a trigger to the short side, or a setup, that is. Not a trigger, a setup. Okay, short setup. So now we're on the lookout for that actual trigger on the daily chart. If we look at the weekly chart here on the USD CAD, you can see back here some real nice strong winners. Is it a coincidence that the 20 is sloping higher? No, and a significant slope. That's what you want to see, is a very, very sharp slope in the direction of your trade. Those are no-brainers. Go through chart after chart after chart, and trust me, you'll be glad that you traded with that sharp slope on that 20-period moving average. Let's look at a few others. Home Depot, for example, another Dow component. Here's the weekly chart. Look at these beautiful setups. Nice big trade setups. Some of them we would not have taken, including this recent one. We would not have been in this one. Okay, flat moving average, wouldn't want you to take it. The ones with a slope work out beautifully. Have a look at the monthly. Monster moves, absolutely monster moves. So easy to trade, no problem whatsoever. Amazon, how many of you trade Amazon? And in fact, I want to mention this. We'll talk a bit more about this later on, but some of you, we got this from some of our pro members in our chats recently, that some of you want to trade Amazon but just can't because it's too expensive of a stock. I'll show you how you can using options later. And by the way, if any of you are option traders, you'll love Voracity because you can really leverage the system with options, and you can actually make it even safer than it already is with options. What this is doing, by the way, is selecting the safe areas on the chart to trade. When all these indicators line up, okay, you've really put the odds in your favor, first of all. And when you have both trend and momentum on your side, it's even more powerful. And during the pro class, I'll show you how to use this with Fibonacci tools, etc., to make it even more accurate. The other thing I struggled with this over the years was that the more accurate I got the signals, the less active I'd become, right? For you to try to add more and more indicators and have them line up perfectly, you know, the fewer times you find that that actually happens. So that's why it took me so many years. Now it's at the point where you get plenty of setups, but it still does what it needs to do, is limit the downside, okay, without capping the upside, okay? So back in here, you'll see that it had a setup, but it never triggered. A couple bars later, it actually did set up again, and then it did trigger, okay? There are a number of things that have to happen for it to be confirmed, and trust me, you want it to confirm it. You want that safety net on your side. But again, a lot of these stocks, and here's the other thing, a stock like an Amazon, an Apple, a Nvidia, all of those, they weren't always these big monster stocks, right? Amazon, for the longest time, was in the low 30s, 40s, right? Really wasn't doing much. Then, out of nowhere, it just took off. Well, for the longest time, we didn't get any sort of signal at all. And even when we did in here, there was no reason to take that one. We only were interested once we had that slope on our side and we're in the clear, had cleared highs, etc. And that's where we got the big moves. Now, you can say, well, you had to wait till it was a $300 stock. Yeah, but we got in from 300 and pretty much rode it all the way up to 1900. So, you know, it makes a big difference. Let's look at a few others. And again, I'm just going off the top of my head. Actually, I see some of you have entered symbols. We'll bring those up in just a moment. Have a look at MAR. Again, this is a monthly time frame. You can see how clearly it picks off the big winners. Let's go back to lower time frames. There's the weekly. Beautiful. Again, most of these down here, you will not be trading. Okay. Daily chart. Many of these you will not be trading. I can tell you will be trading like this. Look at that slope on that 20 here. This was such a no-brainer, such an easy play, okay? Compared to in here where we had a flat moving average. You know, let's look at another Euro USD maybe. Probably the most popular Forex pair out there. And there it is, right? Now, maybe you wouldn't have traded this one, okay? Flat moving average, okay? There was a reason to, but even if you would have skipped this, that's okay. Why? You would have caught this one, that's for sure. Here's the no-brainer trade. Here's the very safe play, the one with trend and momentum on your side. Very easy to enter, very easy to manage, okay, all the way through. I see some of you asking for Netflix. Let's have a look at Netflix. Here. There it is. Once you have that slope, it's a no-brainer, nice and easy. This is the daily time frame. Have a look at these trades, the size of these trades, and recently to the short side. Okay? You can look at chart after chart after chart. The thing is that you get to decide which trades you take and which you don't. Now, I will give you a very clear definition of what you want to look for. okay, with these in the pro class. Even if you were to ignore all that and just stick to the absolute bare minimum, which is an upsloping 20 or a downsloping 20 for a short signal, okay? More often than not, many more times than not, it works out very well, and there are huge winners. Even if you were to catch a portion of this, okay, even if you couldn't stomach staying in till the end and caught a piece of it, the safety net is still there. When it triggers and it doesn't go well, it'll take you out right away, okay? And that's the main thing. Now, the other reason why I'm going to encourage you to trade this with options, okay, is because there's one thing that if you're an owner of stock, you can't get around. So let's say we had bought Netflix shares here, okay? We had all the right conditions, everything's great, but we can't control whether there is a 9/11 about to happen around the corner, or let's say there's just bad news on Netflix, okay? They release a surprise announcement that half their subscribers have canceled. Who knows? Whatever. Something we don't expect. We can get a gap against us, right? On a gap like that, as a stock owner, you can't help it, and you'll take that full loss. When you own an options contract, you may lose the full amount you paid for that option contract, but it'll be minuscule compared to the price of the shares, right? Or if you want to own the stock, but you marry a put to it, you will lock in a sales price, a sell price, and no matter how big of a gap against you, it won't matter. You'll have an out at your specific price. So you can control the amount of risk you take, and that's what I'm going to encourage you to do, and what I'm going to teach you in the pro class that goes along with this, okay? So I hope I've showed you enough examples. Maybe we have time for a few more here. Let's look at a few more at random. Here's one been following for a while, waiting for this to start trending again. Here's ODFL, beautiful move back in here, okay? Then it kind of went wonky for a while. We wanted to stay out of all of these. Now it's starting to trend again, and now it's just that support. What we'll be looking for here shortly is for it to break below the support it's currently at right now and regain momentum. Once it regains slope to the downside here on this 20 and we get the next trigger, there's a lot of room for this to drop, and that's what we'll be looking for, okay? But again, it does a decent job of catching those bigger moves. Now, let me tell you a couple other components to this charting platform. By the way, this is, if I haven't mentioned it, the Tactical Trader platform. And there are other useful tools here. First of all, for the Voracity strategy, there is a scanner. If you look to the right here, to the right of the watch list, there's this black bar. And here, there is a scanner for just about every tool they have here. Let me show you the Voracity scanner. You click on that button, and again, with this scanner, there are a number of things you can search for. I'll go through some of those other tools in a moment. Here's Voracity. You can select the market that you want to scan, whether it is the Dow 30, main FX pairs, NASDAQ 100, the S&P 500, Russell, cryptocurrencies you can do on here, okay? All of that. Let's stick with the NASDAQ 100 for now, and select the daily time frame here. Scan it, and in a split second, you'll see how quick it is. It brings everything up. Now, first of all, here you can select the type of signal you want to look for. If it's just a long setup you want to look for, you can uncheck all of these. I've left them all checked to show you that when you do run the scanner here, you get the list of stocks within that index, and under the signal column, it'll tell you exactly what stage it's in. So this one is in a short trade, this one is in a long trade, etc. Now, if you click on the title, it'll sort them. These are the buys, These are the ones currently flashing an exit signal. And you want to scroll down to where it says long setup. These are the new ones coming up. And then if you click on it, it'll just populate the chart with the signals and it'll show you the current one. And you can decide whether or not this is a high probability setup or not. You can see the moving average here, completely flat here right now. So this may not be one of the best ones out there. Let's click on the next one, right? This one does have slope, but it has a lot of overhead resistance. We're going to go over a lot of these types of things in that class. Let's look at Costco. Okay, now this one looks interesting, doesn't it? First of all, very clean chart, very clean, very predictable, very strong trend in place with very strong momentum. Look at that moving average. The last time it set up, it did so around 205, and it took us to about the 220, 222 area. Now it's signaling another entry, right? So this is one that I would personally be interested in. But again, the scanner saves you a ton of time. We'll go through everything in a split second, and you can sort it in any way. You'll see a little star here whenever you hover over one of the signals to the far right. If I were to click on that, what that does is it adds it to my watch list, okay, immediately. If I ever want to remove an item from the watch list, just click the X to the right of that signal. It's that easy, okay? Now, there are other tools on this platform. One of my favorites is the seasonality tool, okay? If I go here and I go to seasonality, what this does is it will populate by month how the stock performs during that month of the year, going back many, many years. So if you look at Costco, for example, going back to the year 2000, so basically we're looking at 18 years of data here. And if we look here, look at the month of November. The month of November, what you see 78% of the time over the past 18 years, okay? Almost 80% of the time, it sees an average gain of about 2.3%. So is that helpful to know? Well, absolutely it is. You're expecting a healthy up move here coming up in that month. Same with October. 72% of the time over the past 18 years, it's gone up on average of 4.4% during that month. So it looks like we're headed into a decent time where we should see gains. September, October, November, it looks like a very healthy seasonal period for Costco, while we're getting a long signal on Voracity, right? So very, very helpful. And you can scan ahead of time. Again, there's a scanner for this. If we go to the scanner, bring it up here, you can put in your parameters. I've chosen the NASDAQ. I want a minimum average of at least 80% of the time. Here at minimum of 2% move, that sort of thing. And I've taken the start year all the way back to 1990. If I scan that very quickly, you can see it'll populate it. Now it's come up with 3. Here's ULTA, okay? What ULTA shows us is that during the month of September, 90% of the time since 1990, it's been up an average of 14%. So there's a huge opportunity coming up in September, right? And to pinpoint the entry, all we have to do is switch this to Voracity and see if it's already in a long, if it's about to call a long, or sit back and wait for that long trigger heading into the month of September. But that's a massive edge as a trader for you to look at that and say, wow, this stock usually makes a 14% move on average. Some years are bigger, sure, some are less, but an average of 14%, 90% of the time over the past 28 years, basically, there's something to this, right? You look at Facebook. Now, Facebook doesn't have nearly the amount of data. This goes back to 2012. It's a newer issue, but still, during the month of September, 83% of the time since 2012, it's up a little over 8% on average. Google's another one. Google's going back to 1990. So now we have 18 years of data. 86% of the time, it's up on average 5.3%. And then you look at October, 79% of the time, it's up 11.5%. So over the next couple of months, seasonality is telling us we should see a trend higher on Google. What is Voracity telling us? It's very simple. Just toggle from one to the other, right? And have a look. What is it telling us? It's telling us we're not ready to get into Google just yet, right? So that's your other safety net. Seasonality may be saying it's a great time of the year, but maybe this year might be different than the rest, right? Well, we have Voracity on our side to tell us exactly if those indicators and oscillators line up or if they don't, right? So there's a lot of power in that. If you are someone who likes to trade around earnings, now most people like to trade ahead of earnings to try to predict what's going to happen after earnings. Well, here, this earnings tool on the Tactical Trader platform will tell you what history has done here after earnings. So if you look at Google and you look at Q3 earnings, one day after earnings, it's usually up an average of 0.19%, not that big of a deal. But 3 days later, it's up about 3%. 5 days later, about the same. 7 days later, it's up 4%. Let's check another quarter. Q2. What is Q2? Well, Q2 tells us usually it's lower. It's good to have this data, right? But again, you can wait for earnings to go by, and you can then look for what it usually does here. This is going back to 2009, by the way. And then go back to Voracity and take your signal off of there in whatever direction you're expecting this to go. All of these tools you have on the one platform, okay, working together. So together, they're very, very powerful. You also have a candlestick scanner where you can scan by signal. A candlestick formation, that is, morning star, evening star, bullish engulfing, bearish engulfing, you name it. And if you click this tab and pick candlestick patterns, what it does is it plots the type of candlestick formation. So you can even leave this on your chart, and just it'll give you a heads up whenever that pattern takes place. It's very convenient. You also have a Fibonacci tool here. Okay, let's go to the cues. I saw a nice setup coming together on the cues earlier. Here you go. This retracement is coming right in to the 618 extension, right, on your Fib retracer. It will automatically draw this in for you. You don't have to decide the most recent high, low, etc., and try to plot this on your own. It will do it for you, okay, automatically. So now, when you're coming into an area like that and expecting a bounce, that's when you might want to be on the lookout for a Voracity signal. Now, the 20-period moving average here is kind of flat, right? Ideally, we'd want to see a slope, but if this had the slope in the right direction and was approaching that 618, and then we got the signal, and seasonality is telling us that the next couple of months should be going in that direction. All these things put together can really give you an edge in the market, and that's the whole reason for this. Okay, so a lot of information there. I see there are a ton of questions. Before we start answering some questions, I do want to make you aware that folks at Tactical Trader have put together a couple of packages for you here as a way for you to master the market. There is the Day Trader package and the Day Trader Plus. Let me explain what you get in each of these. So with both, you get all those tools. You get the charting platform. You get all the tools that come with it: seasonality, earnings, Fibonacci's, all of those, the scanners. You get the Voracity, the full Voracity indicator. The other thing you get is that on-demand training with this package, okay? Where it's a class where I will teach you exactly which signals to take and which ones to avoid. Okay, again, you get the full suite of products, the candlestick scanner, etc. This has real-time data, all the time. This is not an extra add-on, no extra cost. It's all included. Okay, and it works on both your computers, be it laptop or desktop, and tablets. This is the annual fee, $9.97. The Day Trader Plus package, you get everything you get here, but in addition to this, you get a live training session coming up next week on August 21st, okay, with me, where you can get all your questions answered. You'll have had a week with the platform to play with it. This is where I'm going to share with you how you can trade this with options and really leverage it with options as well. Trade those stocks like Amazon without taking as much risk, okay? But along with this, you get everything here again, the Voracity indicator, all the tools, real-time data, all of that. But you also get white glove setup service, which means the train pros at Tactical Trader will set you all up, make sure it's all running nice and smoothly for you. You'll get the live presentation. You get the options plan for intraday trading. And along with that, you'll also get 3 months of pro training of our Trading Wins Pro training service, which includes the nightly videos I send out, the live market chats, which happen twice a week. And these are great because you can ask me any questions you like, anything to do with trading. It doesn't have to be on this. Anything you're struggling with, I'll try to help you with. It includes a course of the month at no extra charge and other premium videos, etc. So these are the packages. $12.97 for the Day Trader Plus package. Everything included. The link for this, which I should have mentioned at the beginning, was tacticaltrader.com/Voracity. Tacticaltrader.com/Voracity. Okay. Enter your phone number in the chat. If you have any questions at all, we'll make sure someone gets on the phone with you, answers all your questions, gives you all the information you need, and sets you up properly. And now I'll ask Raul to come in, and we'll see if we can answer some of these questions for you. I see a lot of them in the chat. Raul?
There are a lot of them in the chat, Vince. Very, very busy session. A lot of them were for simple requests like Baidu, Baba, XLK, XLU. That's from Suresh and BB. I'll get to those. I wanted to just confirm a couple of things. Sam in East Hampton was saying, what are the green signals when you were going through it?
The green signals, so let me just bring up the chart again quickly and go back to Voracity. If you see green circles, these have to do with a long trade. The red are a short trade, okay? And let me get off the 10-minute time frame here. So if you hover over them, it'll tell you what it is. So there is a setup, there's an entry, long enter, and there's an exit, okay? But green are long, red are short. One thing that I forgot to mention that I want to mention right now is there's an alerts tab here. You can set up alerts. They'll be available very soon. Let me just quickly go back to my slides and show you what these will look like. So when you set up an alert on a particular stock, you'll get an email like this. The subject line will be, for example, NVIDIA for comma D, which is for daily time frame, alert on Voracity, long enter, okay? If it's a different type of alert, it'll be there. And then in the text of the email, it'll show you this is what your inbox will look like when you have several alerts, okay? Those are coming very, very shortly as well.
Suresh was asking whether this works on all time frames. We've named the package as day trader, but that doesn't mean that you have to be a day trader. We just thought it was a catchy name.
And any time from 1 minute, 5 minute, 10 minute, 30, 1 hour, daily, weekly, monthly, and works the same across the board.
Are there specific time frames that work better for Voracity, or is it the general kind of technical analysis program where the longer time frames tend to work better?
It depends what you're trading. So if you're trading a 1 minute or a 5 minute, you need something active, something with volume, right? So there, you know, usually the higher price stocks, or the ones that are have a news story and are very active, that will work much better. Obviously, the higher time frames will always work extremely well, because this is based on technicals. So the higher time frames will always work well. But I hope we've shown enough examples to convince you that on any time frame, this works very well if you follow the rules and you are trading with, the odds stacked in your favor. And there's nothing complicated here. The signals plot by themselves. The program does that for you. All you're looking for is a couple of other things, like a slope on that 20-period moving average. Very simple. There's nothing complicated here. Don't expect to come to the pro training session or watch the recording of it and find something that you may think, oh, geez, I can't do that. There's no way I'm that sophisticated. No, there's no rocket science here. The combination of the indicators involved, the complicated stuff has already been programmed in. For you to trade this, it's very, very simple. There's just a couple of little things to look for, and I'll go through all of that for you.
I'm really excited about the options module that you have coming up, because a lot of the big stocks that we look at, Tesla, Amazon, Google, etc., or Alphabet, they're big money issues that you can't trade 100 share lots for most people, I would say.
And I can't stress it enough. Options really help protect you. Okay, they really do, because more often than not, option contracts are very inexpensive, and you can only lose what you pay for if you're just buying options, for example. And you don't, by the way, have to know any sophisticated option strategies. Simply knowing how to buy a call or buy a put is all you need for this. But you can also leverage these big winners even more while taking even less risk with options. So I'm excited to hold that class as well.
Mehdi, Alan, Paulette, Suresh, Hassan, we've got your phone numbers. Thank you. For the rest of you folks, if we didn't get your questions, you can put your number in the chat box, and we'll do our best to get to them. There's a couple of other questions. Does this work on Macintosh computers? It does work on Macs.
Yes.
Is there a payment plan? Yes, there is a payment plan. It's one payment. That's the plan. And I say that with a little bit of I'm kidding a little bit, but you know what? It's an investment in your trading lifestyle. If you want to get to that level where this becomes a profession for you, or you're thinking about making this something where you can do this as a full-time kind of gig, then with anything, there is a bit of an investment required. Would you agree, Vince?
Yes, I would agree. But what the other thing I want to stress is, we're not giving you this and sending you off and leaving you on your own here. We're here. We're here to support you. We're here to help you. If you take the platform, you try it, and something seems off, or you're not seeing the consistency or whatever, send me an email, give us a call. I'm happy to work with you. And that's why in the Day Trader Plus program, we're adding those additional months of pro service with our Trading Win service, so that we're there for you to answer your questions and help you throughout. I can tell you, I wouldn't be selling this if it wasn't ready to be sold. This is and has been extremely consistent for me, and there are many of our members that will attest to that. Who have really been able to grow their accounts with this, just by doing the simple little things, sticking to the ones that have momentum and a solid trend behind it. All you want to look for is a nice clean chart with momentum, and then wait for these signals. Okay. I've also given you the money management plan, and I can't stress enough how important it is to follow that plan. This session is being recorded as well. You'll get a recording of this. Go back, listen to those over and over again if you have to, until you get them down pat. It's super important.
Sam from East Hampton says something that I think you'll agree with. He says trading has to be simple to make money.
Now,
I know that.
I'm
Go
gonna
ahead.
go. I'm gonna go a little further. It has to be simple and boring. Okay, I say this over and over again. When you're successful, trading is going to be extremely boring. Why? Because your job as a trader is to simply find a pattern that works and then to rinse and repeat. That's it. You're looking for one specific thing day in, day out, chart after chart. When you find it, you execute, right? You follow through, place that order, and manage it. It is that simple. Okay. What we've done here behind the scenes by programming this strategy is put years and years of work and live market experience to work for you. This isn't just um, some theory behind it. This has actually been proven over and over and over again through many years of actual live trading. Okay, this isn't just some back test, that we've done and it's come out with a positive figure over one snapshot of time and thrown it out there. This has been put through the ringer through all types of markets, and I continue to use it daily, and it works extremely well.
Greg says, is there any additional cost for ongoing data service? No, Greg. All the U.S. data is included. It's real time. You'll enjoy that. Enjoy not having to pay any fees. SP in Santa Clara says, Vince, the simple and boring process has helped me reduce my trading activity to focus on good setups. And this is what it's all about. It's about quality over quantity, isn't it?
No doubt that the thing is, as traders, that's one of our biggest struggles. Is it's hard to fight the urge to look for the next great thing, right? And try to find that holy grail. Or it's hard sometimes to sit on our hands and not trade um, when we shouldn't. And because as traders, we do have a bit of a gambling mentality, and we want the action, right? You want to get in there, but keeping it simple and just sticking to what works for you is super, super important.
All right, Vince, go ahead and recap the offers one more time with that small investment. I would go out on a limb and say one trade will make that money back for you. One good trade on a Netflix or a Tesla or
It
even
can,
Microsoft.
you know what, it can, but even if it takes you several trades, I mean, in the long run, again, having more winners than losers and having bigger winners than losers, that's the kind of math you want on your side. So let me just recap this quickly because we're well over time here. If you go to tacticaltrader.com/Voracity, that'll take you to this page. And here's where the two packages are. There's the day trader package on the left, which includes the full Voracity indicator, along with all the other tools here on the Tactical Trader platform, the Fibonacci tools, the earnings, the seasonality tool, the candlestick tool, and all the scanners that come with it. Real-time data is included, okay? And the on-demand training session, where I tell you which trades to take and which to avoid. Then on the right here, and that package is $9.97 annually. And then here is Day Trader Plus, which includes everything on the left. But in addition to that, you get a live training session next week on August 21st. You get the white glove setup service, where one of the pros from Tactical Trader will get on the phone with you and set you all up. And you also get my option plan for intraday trading at that live session next week, where we focus on smaller accounts. And you'll get 3 months of Trading Winds Pro service, including the nightly videos, the live market chats, which happen twice a week, the course of the month at no extra charge, and all the other premium videos available on our site. And that package is $12.97.
Jim, Ronald R, Marianne, Roy, Susan, John, Bill W, Gerald, David, Greg. I'm sorry we couldn't get your questions. And for others that have questions as well, just put your number in the chat box and we'll certainly do our best to answer all of them as we can. Vince, great session as always. The markets, this is a good time to kind of reload for the fall markets, which I'm expecting will be a busy time. Is that what you're expecting as well?
I am. The next couple of weeks we may see some lower volume, but it should be a very, very active fall session, which is usually a great time to trade, by the way.
What gets you excited about the markets? Is it geopolitical news? Is it news on particular instruments? Is it certain CEOs tweeting about companies going private? What gets you excited and happy?
No, sometimes the geopolitical stuff is a little frustrating, but it's the individual stuff on the individual candles for companies. For me, it's really all about the charts. Honestly, that's all you need to focus on. The rest I look at more as entertainment than anything. Sure, you want to, again, keep an eye on the bigger issues at hand, but the charts are all you need. And by the way, if you're new at this, what you really need to do is train your eyes, okay? So the more time you can spend flipping through charts, the better a trader you will be later on. Put the time in, put the work in, it'll pay off.
I thought you were going to say if you're new to this, with this annual package, the first thing you probably want to do is paper trade this for a little while until you're comfortable with it.
Oh, well, absolutely.
Uh,
And I mean, I said that when I put up the disclaimer slide as well. You definitely want to paper trade until you're comfortable. And that's a great thing. Paper trade, if things seem off, get in touch with us and go from there. Rewatch the recordings, make sure you're doing things the way you're supposed to. Once you're comfortable with everything, then by all means, start small and go from there. Um, it's so easy to scale it once you've got the habits down pat and the rules down pat. Scaling this and making up for lost time is easy. It's just numbers, right? But what you don't want to do is go in, not realize you're making mistakes and blow up your account. That's the last thing you want to do. So, start small or test it with paper money and then go from there.
all right, the folks at Tactical Trader just sent me a message saying that they still have a few T-shirts left for those placing an order today, and T-shirts seem to be really popular. So grab one of those as well. That is our Voracity training session. We hope you enjoyed it. Any questions, concerns, feedback, you can always get us here at info@tradingwins.com. The folks at Tactical Trader are online as well, so you can always hit them up there through their chat session. And if we didn't get your number, you can put that in the chat box now, and we'll do our best, as I said, to get to each and every one. Vince, great session. He's Vince Vora. I'm Raul Aurora. This is Voracity. We'll see you soon.
Thanks again, everyone. Take care.